Good morning all and welcome to today's video. I hope you had a great weekend. By the way, I have four pairs on watch today and those are Aussie CAD, Euro dollar, Kiwi dollar and pound dollar. So I'm going to break them down for you now and give you my thought process as I always do. So Aussie CAD, which is at the top of my list, which is my favorite of the pairs which I have on watch for this week in my top six and my additional pairs. Quite a straightforward one, this one, but we have this, you can see on the daily chart, we have prices tapped into this area here. We have this significant low, which is visible on pretty much all time frames, I believe. Yep, it's even visible on the monthly chart rather. You can see that price tapped into this area. This would have been an area where the bigger players would have been getting out of their positions, and the buyers, the bigger buyers would have been getting in their positions for the longs, and they will be potentially riding this up to this target here as a solid first inflection point. Of course, we could push higher, but then we would have that 1, 2, 3 touch structure where I would anticipate a potential reversal. So quite a simple one here. We've tapped into the area, just looking to play this from here to here in this simple little range play. You can see that we have the impulse correction continuations that we look for. You can see price stalled and then it continued, and you can see we're getting a correction here. We've broke out of this. Is such a simple pair to break down, certainly on the higher time frames. My computer has just frozen up for some reason. We shall just wait for that to unfreeze, if indeed it does. So, as I've often said, the name of the game in trading is patience, and you can see a prime example of that here. There we go. Right, we're back in business. So we've broken out of this kind of this squeezed price action here. Price tapped into the area. It got there correctively. We who trade the Falcon strategy are always asking ourselves, how did price reach our area of value? And you can see it reached the area of value correctively, which means that an impulse up in the other direction is the likely next move. So that we have a clue ahead of time. A lot of people are looking at whether price reached an area. They're not always looking at how price reached an area. Okay. Sometimes there's a big difference. So we reached that area correctively, and now we've kind of broken out of this big squeeze now, and you see price come back down. It retested the back end of all of this and then pushed up, and now we're consolidating in this area for another potential impulse correction continuation. Okay. So as I drill down, you can see that price tapped into a footprint was left. Price come down, it left a footprint. It moved up, it came back down again, tapped into that footprint, washed out all the orders that were below there. And you can see last week we had this very solid daily close and this push up, giving me a clue that we've done enough. We've washed out all of the stop loss orders and the limit orders that were down here, and that we could be seeing that move to the upside. Okay. You can see evidence of that here. What I always talk about, we have that footprint, we come back down. We kind of, if you just zoom in, if we analyze this in great detail, you can see that we ever so slightly near missed to this area. It is negligible, but we didn't quite tap into the area. That gives me a clue that what will likely happen is that we will move up correctively because we didn't tap into the area, as people try and buy this, and the orders that were still in this area, and the orders that were being placed in this area were dragging price down, which would mean that we would likely move up very correctively. For that reason, we would have that kind of seesaw effect as people try and buy this, and the orders that are still there and being placed in the area drag price down, and that's exactly what happened. We tapped into that area, we got there correctively. You can see that corrective price action there. That gave me a clue that if we reach an area of value correctively, we will likely push up. That's exactly what happened. And now, as you can see, we may be forming. I'm always looking at the proportions of a correction. Okay, so what we may be forming now is that impulse correction continuation to push higher, to potentially tap into that higher time frame target that I was talking about a moment ago. So when I did this was what I was anticipating. I did my forecast on Saturday morning, and this is what I forecasted. You can see that we've come back down to this area here. This may or may not be ready by the end of the day. We shall see. But what I will be looking for is a flag such as this, and then I will be looking for a risk entry within the flag specifically. And the reason being is because obviously if we were to get something like this and I was to try and take a reduced risk entry on the break, it would be quite a wide flag, and then I would struggle to manage this up to this high. So we're risk managers first and foremost, and if I was to take a reduced risk entry on the break of the flag, the stop loss wouldn't be too wide. I'd be uh, quite happy with that, but I wouldn't be able to manage it to the high. It would be difficult, especially with all of the things that I have to do during the day now, which are a lot. There's a lot more things that I have to do during the day now than there previously was. So I have to factor that in as well. So it would be difficult for me to manage it up to this high. However, if price came back down for whatever reason, however, if I was to get a risk entry within the flag, then I would easily be able to manage this up to the high for something in the region of 4%. So I have an alert set just to see if we push up and to give this flag a little bit more depth. Have an alert set just there. If that doesn't trigger, and price just starts messing around and coming back down again, then I will not be looking to place a trade on this pair. So euro dollar, I'm going to break this down from the higher time frames. Okay, so on the higher time frames weekly chart, we have this 1, 2, 3 touch structure here. We have this kind of 1, 2, 3 touch structure here. Do excuse the drawing; it doesn't necessarily need to be neat. I'm just explaining the concept. We have this 1, 2, 3, which taps into there. This has a 1, 2, 3 middle section. You can see the waves there. Impulse, corrective move down, followed by a more impulsive move up. And then we have that impulse down, followed by a sideways correction, followed by a more impulsive move down. And that 1, 2, 3, which taps into the last exchange of liquidity on the left, where I would expect the bigger players to be getting out of their positions. And that's exactly what happens. And then we get an aggressive move up to the upside. Okay, so price has no reason to come back down to here because it's a complete piece of structure. And now what I'm seeing, we have these series of near misses. Notice that price, as it pushed up, it left a footprint here. It came back down. It near missed to the footprint, giving me a clue that it will likely come back down to take out the low. And then we have that 1, 2, 3, which taps into this exchange of liquidity. We then come down, take out this near miss, and take out the low, which it near missed to, giving me a clue that that's where the orders are likely sat. And then we push up aggressively, and I've just evolved my trend lines to encompass the most recent 2 touches. So this one, this one. So now we have that 1, 2, which taps into that area, and now I'm just looking for that 1, 2, 3 to tap into this area, which we didn't tap into last time around. And potentially this could go a lot higher because we could be seeing that longer term impulse correction continuation, which breaks out further to the upside. If we were just to measure this and take it to the top of the correction there and then measure the move out, okay, and we assume that the move out is of a similar length, that would actually take us up to these highs, okay? So we could potentially go a lot higher. You can see that we're starting to consolidate. We've had that impulse up followed by this correction, and we could be seeing a move out to the upside on the lower time frames as well. So you can see we've done the same thing again. Price left a footprint, it came back down, it near missed to it, then it kept moved up correctively, most likely because there was still orders down here which needed to be tapped into. In fact, I do correct myself there. I've forgotten what the lower time frame structure was on this one. We tapped into this area, okay? We didn't near miss. We kind of have near miss to this. This is partly why this is lower down on the list. But if we just analyze this on the 1 hour chart, I'd forgotten what the lower time frame structure of this was. Now, we don't necessarily need to come back down here, although we have near miss to it, and I'm mindful of that. But we have this structure here. We have, because this is a completed piece of structure, we don't necessarily need to come back down, okay? So we have that 1, 2, 3 with a 1, 2, 3 middle section, giving me a clue that this is completed. When we tap into this area, wash out all the stop losses and the limit orders that were down there, and then break to the upside. So we don't necessarily need to come all the way back down to here, but I am mindful of the fact that you can see this low has actually near missed to this. So it's possible that we could come back down. However, we have tapped into, I'm seeing this as one separate piece of structure, and this as a piece of structure in its own. So we have that impulse, more corrective move up, followed by a more impulsive move down. We tap into this area, potentially wash out all the liquidity. Okay, and what I'm going to be looking for from this pair today is the following. This doesn't, this is a bit of a strange looking flag at the moment. So that gives me a clue that this is not complete, especially as it doesn't have a middle section. Okay, so it doesn't have that kind of, so that 1, 2, 3 after. So we have the first touch, we have the second touch, but this, we don't have a middle section. So I'm anticipating a potential 1, 2, 3, then price to come back down to give us the third touch, and then we would have that 1, 2, 3 middle section. I've seen these, and I talked about this, I think, on pound Swiss a few weeks ago, where when there's not a middle section, what I've noticed is that price will just consolidate sideways, or it will come back down to test the lows before going. So then you've taken an unnecessary loss by not waiting for the middle section to form. One of the things I always tell myself is, if you cannot find the middle section within a piece of structure, you're likely trading within a middle section of something more complex. Okay, so perhaps you might be trading within something like this, and then this becomes a bear flag to push lower. Okay, and then you have that 1, 2, 3. Okay, so if you can't find the middle section, then you may be trading within it. So I've got an alert set just above here to see if we can push up to give us that middle section. Of course, I'm mindful of the fact that if this flag gets too wide, especially for what is supposed to be a first flag, then that decreases the likelihood of this playing out. So I'm just going to let euro dollar do its thing. If this forms, then I will take a reduced risk entry on the break or a risk entry within it, because I would be able to manage it up to these highs for something in the region of 5%. And of course, if we got the risk entry within the flag, the risk to reward would be even greater. So that is euro dollar. I'm going to move on from this pair and break down Kiwi dollar. So the last two, Kiwi dollar and pound dollar, may not be ready by the end of the day, but what I'm seeing here, and notice that I flipped my bias if you watch my videos regularly, that is not an admission of being wrong. I'm not interested in being wrong or right. What I'm interested in is adjusting my sales when the wind changes direction, because that's what the professionals are doing, whilst the amateurs, many of them, are just trying to be right. If you think that trying to be right is what's going to make you money in trading, then I wish you luck with that. Okay, so what I'm seeing here is this potential impulse. We're on the monthly here. I'm just going to take this down to the weekly chart. So I'm seeing this as an impulse correction continuation to push higher now, to take out this high that we near missed to here. Okay, and then we would have that 1, 2, 3 for a potential move lower to take out this low, which this near miss failed to tap into. This low here, which this near miss failed to tap into last time around, and then we would have this kind of structure. Okay, so just analyzing the bigger, just seeing this as a kind of middle section within that potential move to the downside. Okay, and this would be congruent with what the DXY is doing at the moment. You can see we tapped into this area here, 1, 2, 3. We tap into, it's not so visible. This is partly why it's lower down on the list, but there's a small exchange of liquidity there, which caused price to rocket to the downside, giving me a clue that there's potentially a lot of liquidity there. Okay, and then we have this kind of 1, 2, 3 touch structure. So this, okay, with that 1, 2, 3 middle section there. Bit of a strange, you notice I was looking for shorts previously. That was just because we moved up in quite a non-progressive manner, but a lot of the time the higher time frame can take over, even if the lower time frame looks like we may be seeing a move to the downside. So I'm not surprised by what price is doing at the moment. So if I just drill down to the 1 hour, I've got to be mindful of the time on these videos. You can see that we have broken out of a lot of this price action now, this slightly more corrective price action. You can see that we're trading well above all of this corrective price action. We've broken out of this little squeeze here. Okay, we've broken out of that, and then price left a footprint once again. It left a footprint here. What happened? Price came down. It near missed to this area. It was also a bearish wick. A lot of the time, these bearish wicks get filled before we see the bigger moves to the upside. So I was under the impression, we've even got that on the 4 hour chart. We've got that. This is a bullish wick, but we still got a big wick there that may get filled. Was there one on the? Yeah, we've got this kind of bearish wick on the daily that needs to be filled as well, potentially. So I was just seeing this, particularly how we moved up. How did we move up? we moved up correctively all in all. A little bit of momentum here, but overall this is a corrective move up. We tap into this area correctively, which gives me a clue that we'll likely push back down to take out this low here, which we near missed to last time around. Okay, to give us that kind of 1, 2, 3 move. Okay, and that appears to be at this moment in time what price is doing. So with that in mind, what I'll be looking for today is the following. Let's say this may not be ready by the end of the day, but what I'll be looking for is for price to tap into this area, a push up and a subsequent flag, and then I'll be looking to get long on the break of this flag or within it if it was to form, and then I would be able to manage this up to the high that price has just left us with now, something in the region of 7%. Of course, if we got the risk entry within the flag, the risk to reward would be even greater. That is Kiwi dollar. And then with a few minutes left, I'm going to break down pound dollar, and that appears to be doing what I was anticipating as well at this moment in time. We never know what's going to happen. This is slightly strange price action but we have that 1, 2, 3 with a 1, 2, 3 middle section. We have a near miss here, which failed to take out this high. That gives me a clue that this is a completed piece of structure and that this near miss will likely be taken out and price will finally tap into this area here. Okay, we've got some slightly strange price action on the lower time frames, which is partly why this is lower on the list, but we have that impulse correction continuation, okay, giving me a clue that this is a completed piece of structure here. We have that 1, 2, 3 with a 1, 2, 3 middle section, so price doesn't necessarily need to come back down. We have an ending structure here, which also has a 1, 2, 3 middle section, 1, 2, 3, we tap into the area, push up, and then you can see that we have this. This is a difficult one to know where to plot the trend lines because it's some slightly strange price action. So I wouldn't be surprised if price does something a little bit strange. But we have a 1, 2, 3 there with a 1, 2, 3 middle section. We tap into that area, move up in a non-typical way. That's another reason why this is lower down on the list. But you can see now that we have, we've impulsed up. As with Kiwi dollar, we've broken out of all of this now, and then if I just drill down, price has left us with a bit of a footprint. Okay, so we can kind of separate these. We can kind of separate these structures here. We have that little piece there. Okay, price leaves a footprint. We come back down. We near miss to it. We come back down again. We near miss to this low and this low, giving me a clue that this is potentially the base, the area of value. We come back down again. We near miss to there again. And then we move up in a corrective manner because we have this. Yes, we have a bit of impulsive momentum there, but overall, this is a corrective move. We tap into this area here, and that's where I was anticipating price to come back down aggressively to tap into this area here, which it near missed to once, twice, 3 times a lady. Okay, it failed to tap into this area 3 times. It near missed it, give me a clue that we will likely come back down to take out that low before pushing up to the upside. And that appears to be what has happened. So we can now plot our trend line on here because we've pushed down. Price has given us 2 tops to work with. And what I'll be looking for from this pair, again, it may not be ready by the end of the day, is I will be looking for the following. So if price pushes down, let me just sort this out. Whoops, I didn't mean to do that. Okay, let's take that out, put it there. Okay. So if price taps into this area, pushes up and then flags, then I will be looking to get long on the break of the flag or within it. And then I will be able to manage it up to these highs for something in the region of 5 to 6%. Of course, once again, if the risk entry within the flag shaped up, then the risk to reward would be even better. And then, of course, we have that higher time frame target, which is all the way up there, that high that we near missed too. So that's what I'm going to be looking for today from these pairs. I hope you've enjoyed this video, and I will see you again in the next one. Thank you very much indeed for watching.